Sam Bankman-Fried, the crypto billionaire.
Sam Bankman-Fried went from buying his first Bitcoin to becoming a multi-billionaire. The FTX founder is now worth an estimated $11 billion.
Your company is 2 years old, and you're doing $400 billion worth of volume per month.
The alleged fraudster of one of the greatest criminal conspiracies ever.
And the generous view is that you are a young man who made a series of terrible, very, very bad decisions. The less generous view is that you have committed a massive fraud.
Sam Bankman-Fried grew up with a life of privilege, attending one of the top schools in Silicon Valley, with tuition exceeding $50,000 per year. As the son of 2 Stanford law professors, the path of academia was an obvious one. He once came back from school crying because it was too boring, and was promptly sent to math camp, coming back to start the Puzzle Hunt Club, a nerdy group at an already nerdy high school. Continuing to excel, he studied physics and math at MIT, and joined a frat, Epsilon Theta. Wow, glow up alert? Party boy? No, not at all. It's been described as a frat, but replace all the alcohol with the, quote, nerdiest stuff you can imagine, often playing video games and board games all night. You get the idea, he was a nerd. Literally could not be me. After graduating, he started working at Jane Street Capital, a trading firm where he specialized in arbitrage, which is basically buying something where it's cheap and selling where it's more expensive. More on this later, but it's basically as close to free money as you can get without reposting Andrew Tate clips. After a couple years at Jane Street, Bitcoin had its first major bull run, rising to over $20,000. This was the spark that ignited Sam's interest in crypto, setting our story in motion. Alameda started in 2017 with the mother of all arbitrage opportunities, the kimchi premium. South Korea has a bunch of regulations that make it very hard to move money in and out of the country, which, combined with the popularity of online gambling and the thirst for high-yield investments, led to the kimchi premium. Bitcoin in Korea was usually around 5% more expensive than in the US, with the premium occasionally rising over 50%. After the first Bitcoin boom, global demand for crypto spiked, and SBF saw mispricings like the kimchi premium running rampant. Sam created Alameda to exploit this, buying crypto like Bitcoin where it was cheaper, like the US, and selling in places where it was more expensive, like Korea and Japan. Basically, he was profiting off of degenerate investors like myself, and it was going very well, earning Alameda upwards of $1 million every single day. While trading with Alameda, Sam started to get frustrated with the platforms he was using and noticed 2 big opportunities. 1, crypto exchanges were losing millions daily. By going through a bunch of different middlemen, fees were eating into profits. 2, crypto derivatives. If crypto is gambling, crypto derivatives are Russian roulette, with poisonous snakes everywhere and the room's on fire. Among many other things, they give you leverage, which means your gains and losses are amplified. These assets weren't easy to get for everyday traders. Sam wanted to solve these problems and integrate the buyer, the seller, and the exchange all into one platform, also making crypto derivatives as easy as possible to purchase, with the obvious side mission of taking everyone's money. In 2019, with his partner, he founded FTX to do exactly that, and it exploded. Less than a year after they started, over $12 billion was moving through FTX daily. At their peak in January of 2022, they had an eye-watering $32 billion valuation. Sam had golden boy status, getting dubbed the most generous billionaire. There are entire interviews just asking him about his philosophical views, effective altruism, and how
In the end, my goal is to do as much good as I can for the world.
Stop the cap!
he was praised for his humble lifestyle. Oh, he drives a Toyota Corolla. He's just like us. Conveniently leaving out the $40 million mansion in the Bahamas. Everything is going great for Sam. FTX is winning the game of how many places can I put my logo. They had Steph Curry, Larry King, Shaq, Kevin O'Leary, all praising almighty FTX. With only a couple hiccups, like the US government telling them to stop saying deposits were insured, but all's well that ends well. the rumblings began, and the first domino in a Guinness World Record long chain starts to fall. On November 2nd, CoinDesk releases a report saying that almost $4 billion of Alameda's assets, Sam's trading firm, is in FTT. FTT is FTX's own token. They make it themselves. While there are some uses for FTT, its value is very much connected with FTX. Now, why was this a big deal? Well, it didn't necessarily mean anything, but it showed that the line between Alameda and FTX wasn't as clear-cut as one would hope. It seemed like maybe, to cover up some bad trades, FTX was giving Alameda their own FTX bucks. This blurred border led to fear. Was this the only way the two companies were colluding? It seemed unlikely. Enter Changpeng Zhao, butchered it, the CEO of Binance, the biggest crypto exchange in the world. Quick backstory, Binance was actually an early investor in FTX, and Sam and CZ were actually friends. But there seems to have been a fallout after Binance pulled their investment in FTX in July of 2021 and exchanged it for FTT. Afterwards, CZ claims that Sam was unhinged, threatening Binance employees. Back to the present, CoinDesk releases this report and something seems mighty stinky. CZ announces that because of recent revelations, Binance is going to sell all of their FTT. In response, Alameda tried to buy all of the FTT privately, trying to avoid the huge market impact of a sell-off of this size. CZ declines Alameda's offer, and everyone gets scared. Billions are flowing out of the exchange, and withdrawals are taking longer than usual. But there's hope. The whole time, Sam reassures fearful investors, tweeting that FTX is fine and assets are fine. Disaster strikes, withdrawals on the site are paused, and FTT nosedives. SBF, less than 24 hours after claiming everything is fine, finally admits that they're experiencing a liquidity crunch, meaning they have the assets to fund everyone's withdrawals, but it can't be turned into cash right now. This was bad. It meant that customers' deposits on the exchange, not FTX's money, was being used, invested, or something by FTX. In their own terms of service, they claim they won't do anything with your deposits, and this news seemingly contradicts this. And here comes the knight in shining armor, CZ, and there's hope again. Binance announces that they've sent a letter of intent to acquire FTX, but they're going to do some more research first. Everyone is biting their nails in anticipation. What's gonna happen? CZ rides in. Bad news. Because of mishandled customer funds and alleged US agency investigations, they will not be bailing out the exchange. Womp womp. SBF tells employees that he's scrambling for cash, trying to find anyone to fund the company. Side note, CZ almost single-handedly dismantled FTX. He legitimized and brought the fear that FTX didn't have people's money. By refusing to sell their FTT to FTX privately, they obliterated the value. The fear, combined with the drop in FTT, was the final blow on the straw house that ensured FTX would collapse. If there hadn't been a mass exodus, maybe Sam would have been able to recover, but there's no way to know. Either way, CZ was able to take out one of his biggest competitors, with a move so devilish it would make Martin Shkreli blush. Sam even alluded to this himself, saying, "Well played, you won." Anyways, back into it. Withdrawals resume, a positive sign, but things seem rocky. The pullout continues and FTT is ground to dust, falling 90%. The Reaper is a knock-in. Sam resigns and FTX files for bankruptcy. The company is dead.
A few moments later.
The following weeks are a bloodbath. Sequoia, Gemini, Genesis, all affected. The crypto markets aren't happy either, with Bitcoin alone losing almost a quarter of its value in a matter of days. As the dust settled, $8 billion in customer funds had disappeared. With an accounting error that big, maybe it's time for Sammy to go back to math camp. Math. There is huge public outcry, as Sam is still scheduled to speak at a New York Times event in the city. With seemingly no legal action being taken against him, temperatures rise. The day of reckoning finally arrives. Sam is arrested in the Bahamas with charges from the Justice Department, the SEC, and the CFTC. He faces up to 115 years in prison, with his trial set for October. So what happened? Crypto has skyrocketed in popularity since the Bitcoin bull run when Alameda started. This means more money flowing into crypto, meaning prices are more likely to be equivalent across markets, meaning fewer chances for extremely profitable arbitrage. It seems that arbitrage wasn't giving the returns Alameda wanted, backed up by the CEO herself. By 2020, they started getting into trades that exposed them to the risk of the market moving, and, admitted by Sam himself, got bid by the crypto winter after the Luna collapse. To fund or cover losses on Alameda's risky trades, it would have been easy to give them some free money in the form of customer deposits, and this is backed up by insider accounts. There were several types of accounts on FTX. There were custodial accounts, which are basically just piggy banks, but there were also accounts that provided a return, like FTX Earn, which yielded 8% per year. These funds seem to have been traded by Alameda. Here's the issue. FTX's funds were all put in one big pile when everyone tried to pull their money out, according to Sam. Thank you, coffee. If there was no division of funds at the end, why would it be there at the beginning? It seems like FTX was Alameda's crooked mommy, giving them an allowance funded by stolen money as they saw fit. A lot of things are yet to be seen. It's unclear whether other higher-ups, like the CEO of Alameda and Sam's rumored ex-girlfriend, Carolyn Ellison, were also involved in this debacle. It's also unclear what's going to happen with the $400 million stolen in the FTX hack and the $600 million in Robinhood stock. Sam has pled not guilty, and yes, that is possible. It's also possible that this was all a dream, and the money was just the friends we made along the way. With Sam now out on a $250 million bail after claiming he had no money, we'll have to wait until the trial in October to see what he's convicted of. All we can hope now is that anyone who stole billions from the public to fund their own risky crypto bets is held accountable.